G'day folks, welcome back to another update for gold and silver. Now gold is still consolidating. Silver is actually currently hitting resistance after making new highs.
I'm hitting resistance.
Before you go any further, make sure you hit that like and subscribe button to support the channel, and why not subscribe to the Patreon page where we do a deeper dive into some trading strategies with +1 videos, and we also do a weekly bullish share scan. So again, reference the +1 and bullish shares in the link below. In terms of the outlook, the 2025 rally in both gold and silver is not a short-term blip, but reflects structural shifts, central bank accumulation, weakening US dollar, inflation and macro uncertainty, and heightened geopolitical risks. The risk premium associated with geopolitical instability continues to be a major driver for 2026. Many analysts expect this premium to remain elevated, especially in scenarios of renewed global tensions. That said, volatility remains elevated for silver particularly. Near record prices mean any slowdown in industrial demand or improvements in supply could result in sharp corrections. A key wildcard is central bank and official sector behaviour. Sustained buying provides a price floor, but any shift away or profit taking could destabilise valuations. So starting with the long-term trend on the weekly for gold, you can see there the price is still very high above the moving average band. Although it's been a bit of a retrace and consolidating in that range now for a number of weeks. You'll notice here the CCI has actually dropped and below that moving average range of the CCI, which is a bearish, slight bearish momentum. But more importantly, notice this long-term, it's been happening now for a couple of years, this long-term bearish divergence, lower highs on the CCI versus higher highs on the price. And we've drawn a target for that. So if that price continues to pull back from there, if that CCI keeps dropping, we're going to assume it brings back to that 23-38% range. And the way we draw that is we draw a Fibonacci to the significant low before that divergence started. And that's a minimum retrace. Sometimes it just touches it and bounces, other times it falls right through. So at this point, it hasn't reached it yet, but that also coincides with this moving average band as well. On the daily, you can see that I've drawn this resistance up here at 43.80. And they're still consolidating in this range here, just above the moving average range. They're still bullish on the price, but notice the CCI is broken to the downside. And also notice the declining CCI with highs. Also not a bearish divergence, but declining CCI, which is again a weakening sign. We also look at the micro views on the 1 hour chart. And before we go to the back test, what we look for primarily here is first of all the trend. You can see there it's trending down below the moving averages on both the price and the CCI. But also importantly back here, the other thing we look for is any divergence, and this is already played out. You can see there we had lower highs on the CCI versus higher highs on the price. We drew a Fibonacci retrace from that range. And that probably should have gone to that level there, significant low. That's a 23-38%. You can see there a breakdown into it initially, bounced out, and it's currently still fluctuating in that range as we speak. Now in terms of the back test, remember we're going long according to the daily. So the daily, you would have gone long during this period. I've marked it here with these arrows. You would have gone short during that little period, and you would have started going long again during that period according on the hourly back test or hourly trading. So look, going long according to where we are indicated by that blue arrow there. You would have taken long positions according to the moving average band moving higher on the price, but noticing the CCI dropping off, that was giving you a warning, and you would have got out at the very latest during that little period, making that little profit there. Avoid going short, going long again during that little period. Again, noticing the CCI dropping off, and you would have closed it out there as well. Now, in this case, the price started dropping. Avoid going short, and you would have gone long during that little period. Now, notice there the profitability increased when that price started moving higher according to those moving average bands, but also notice the CCI moving higher as well, and you would have closed it out somewhere there. Where we are at the moment, let's get rid of this Fibonacci. Where we are at the moment, it's currently below the moving average range. So is the CCI on the price and the CCI, and you would have closed it out, booking your profits at some point around that level there. So here looking at silver on the weekly, you'll notice again the price is being very strong above the moving averages and still rising. Although notice we had a couple of bearish divergences. The first one was at that point there. The second one has moved up to that point. So still a bearish divergence. And those two areas were marked. That first one was hit. Notice there it hit with the wick of that candle. Price bounce. Remember I said that's a minimum retrace, and it's done that. More than 90% of the time it hits this range. And the second divergence target is at that level there. Now, that's according to this very long-term bearish divergence. And again, that was drawn from, draw Fibonacci from that high. It would have been down to, I believe it was somewhere around that area there, one of those lows there where that price broke below the moving average band. That's a secondary divergence we can expect the price to retrace to. That doesn't mean the price is going to crash. It just means it could actually touch it like it did here and bounce, or it could actually fall through. We don't really know at this point. So we take it one step at a time. That's the weekly. On the daily, it's hit this resistance at 5,900, and it's been fluctuating in that range now, going sideways for a few days. That again, hitting this resistance and drawing another Fibonacci retrace there. That's a result of these. We've had two actually. The first one here, you hit it again. The second one also hasn't hit it yet, but that's a target range marked for it there. So that could fall back as well, so just be cautious. The CCI has already broken into that moving average range. Look at any micro moves on the 1 hour chart. You can see there the consolidation just below that resistance. And notice as well, we had a bearish divergence back here. Price fell back and actually hit it here. You can see that if we extended that range, it actually hit it and it bounced out of there. Again, that was a very minor touch point. But again, notice the CCI is still dropping, and there's always a chance it could fall further according to the daily divergence we've identified. So again, going back to the daily for a moment, you would have gone long from about the 10th of November. So we go to the back test. So the 10th of November is that point there. You would have taken those long positions on your hourly. Again, noticing any bearish divergence and declining CCI, that would have given you some warning signs. But hold your nerve and stay in it until you see the moving average band turn down. You would have got out of the trade there with a couple of little trades. Avoid going short and going long during that little period, closing it out. Again, always paying attention to the CCI. Both CCI and price moving averages are in an uptrend. That gives you more confidence. Avoid going short. Start going long again with the CCI and the price. Hold on, hold on, hold on. Probably closing it out there when you start seeing the moving average band turn down. And where we are at the moment, you probably would have closed out as well with the CCI and the price breaking below the moving average band as well. So just a reminder, if you want to get some share trading ideas, these are some of the trades we've closed so far this month in December, and they've returned to 3.27%. And last month, in terms of returns, we had a few closed trades as well, and they've returned. These are all the trades we closed last month, and they returned just under 6% or 5.66% return.
You must be kidding.
So to get access to those bullish shares, but also the +1 videos, why not subscribe to the Patreon page? Links in the description below. Hit that like and subscribe button. Thanks for watching, and see you in our next video.